So Jillian, kind of same question to you. Can anyone raise any money they want for any their business idea, for example, a real estate project in the US?
Yeah, absolutely. So the thing is, real estate actually gets a lot of great exemptions to it specifically from other laws. You know, the United States is a land of many, 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 many laws. And, you know, where Canada has provincial rules for securities, the states each have their own rules as well. But the law of the land is the federal law. And so some of the exemptions that are afforded under the federal law in the United States, which is governed by the SEC, as was mentioned, those are what are called federally covered securities. And so the states can't really make laws that are more cumbersome than those laws. The law is that for those particular exemptions or rules or whatever, the states can't make more cumbersome laws. So that's a good thing. But even when you're raising money in the United States, you still have to pay fees to every single state where you're raising money. That's what they like to do, is collect money, like most governments. So and that's what they will do. So in the United States, we have laws that regulate the raising of capital. And then we also have laws that regulate what you're raising capital for to a certain extent. But like I said, real estate usually has some really cool exemptions that where some of the rules just simply do not apply because it is real estate. Now, we have an accredited investor exemption. It's called Rule 506, which is under, if you think about the law as a tree, it's under a thing called, so you have the big law is the Securities Act of 1933, which came out of the Great Depression. Then under that is an exemption called Regulation D as in dog. And then under that is a bunch of rules. And the rule we always focus on is one called Rule 506. And under that, if you are an accredited investor, and you're provided the proper disclosure, that is one of those federally covered securities that, you know, where the rule is you can go out, you can raise capital. And if you're advertising, you can only take accredited investors. If you're not advertising, you can take a combination of accredited investors and what we refer to as sophisticated investors, which are people who don't have the same income or net worth as the accredited investors, but probably have some kind of experience that makes them know better when it comes to investing. Whatever the case is, the number one thing you have to remember, whether you're a passive investor or an active investor, is that disclosure is king. And I don't think this is different in Canada or the United States. It's all about disclosure. What did you tell your investors? Did you tell your investors everything that they needed to know in order to make an informed investment decision? And investors, did you receive all the information that you needed to know in order to make an informed investment decision? And what I want to tell all of you is to not shy away from bad news, not shy away from a pessimistic story. If somebody's telling you a terrible story of risk and all the terrible things that could happen, then you kind of want to lean into that just a little bit. Maybe not completely, but you want to lean into that a little bit, because this shows an issuer who's thought about all of the possible things that could happen. And when you think about all the possible things that can happen, you can plan better. And you can put contingencies in place. So don't shy away when somebody says to you, the risk is that we could lose all your money. The risk is, and don't shy away from saying that to people either, because that just shows that you've done your research, you've thought about it, you've thought, here are all the terrible things that could happen, here are all the risks, and brought them to light. And that's really what we want to do. That's what we want to do for our investors. That's what we want to do to protect ourselves when we're out there raising capital. And that's what you want to read when you are an investor. And it sounds counterintuitive, but really that's what you want to be putting out there.